Hey guys, Tex here. Welcome back. In today's video, we're going to do our weekly watch list where we run through our stocks, the market analysis, and just see what's shaking for next week. Okay guys, so welcome back. Let's start out by taking a look at the S&P 500. For that, of course, we use the ticker symbol SPY, which is the ETF that tracks it. And as you can see, we are back up at all-time highs. So very interesting price action. It was looking weak earlier in the week. We came down and tagged the 20 SMA and got bought up very strongly, I should say, off of that, back up to the all-time high. So I want to jump over to the monthly chart because in last week's video, I talked about a possible hanging man candle formation here. As I said, it's not a perfect hanging man. You'd want it usually up here, kind of hanging above the price action, if you will. But it is on the monthly chart, and any of these candle formations that we're looking at, always want to pay more attention to those on the monthly charts versus your shorter time frame charts. But as of right now, it's looking like it's more of a case where buyers stepped in and we are looking to break out higher. So if the market does break out higher, how much higher could we go? Because of course we know there's no resistance overhead. It's all-time highs. What we can do is use a Fibonacci retracement for that. So what I'm going to do is draw it from the low here. This is actually March of 2020, which was the low of the COVID sell-off. And I'm going to draw it up to the high of that move before we actually had our first 2 months of pullback. So that puts our Fibonacci on there, and I have extension levels above. You can see that the first extension level here at the 272 is where we stopped for these 2 months. And then here we broke out above it cleanly, getting into kind of the middle of the range here where we're now consolidating. The next level above brings us, the next extension level above brings us to that 618. Now that 618 is always a very important level to pay attention to on your Fibonacci retracements. So to me, it's looking like we're consolidating here in the middle of the range. If we do have a breakout higher, that's about the area I'd probably be looking for based on the fibs. They're around that 445 level. So going back to our daily chart, as I said, sitting right here at all-time high. If we do break out higher, I would definitely be looking to go for that breakout trade and just go with it unless it fails. If we have a look above and a fail where price falls back down into the range here, then we would be targeting the bottom of the range, probably around 419, maybe even as low as this 20 SMA again, around 416. So I think I'm leaning long, right? I want to see the breakout according to what we're seeing here. It looks good. But I am going to be very aware of any potential look above and fail situation, and I will react accordingly. So let's just go with it until it says otherwise, but right now it's looking like it wants to move higher. Looking at your Qs, they're not quite as strong. They're not up at the all-time high like the S&P is, but they are looking like they want to start moving back into this overhead supply here. So you can see we're trading right into the bottom side of that overhead supply right now. If we push up into that and we find acceptance here, I would expect to move back to the all-time high. We actually have a butterfly open right here at this all-time high, and if the Qs make that move up here in the next week, that should pay out really nicely. So I'm leaning towards the long side, but of course we will always be aware of any potential look above and fail situation, and in which case I would expect the Qs to fall back down into its moving averages here. You got the 50 and the 20. Notice the 20 is underneath the 50, but it is trying to curl back above it, so we'll see how that plays out into this coming week. Now looking at your Russell 2000 for the small caps, this is a pattern that I've been looking at for a bit here. This is your classic wedge pattern. We're currently trading at the top of the wedge. We actually have an iron butterfly open on this with our short strikes at 222, targeting a move back down to the middle of this range. I'm thinking there's a lot of room still left in this pattern to play out, so it's probably going to want to pull back to the middle of the range. But of course, if it does break out above that, probably be targeting the all-time high, if not first resistance here around 230, all-time high sitting up here around 234. But I think more likely we're going to see it stay in this pattern for just a bit longer. All right, so what I'm going to do now is let's run through our sectors. And kind of what I want to touch on is the fact that we saw this really big move higher in the market this past Friday. But what was interesting to me when I was looking at the internals over here is that the sectors that were really making the biggest moves up were technology up 1.2 and you have communications up 1 point. Other than that, you have consumer discretionary that's up 1/4 of a point. Financials are up 0.1, and you've got consumer staples up not even 0.1. So really, You've got tech and you've got communication. Those were the two strongest performing sectors, with consumer discretionary just a little bit on top of that. But basically, like I said, very few sectors were green, but the ones that were had a lot of weight in the index. So in terms of weight on the index, technology has the largest weight on the index. So if tech is strong, the market's just not going to sell off because it's such a heavy weight in the index. Now, when we look at the technology sector itself, you can see that it's very similar to the Qs. It has this overhead supply that it's trying to move back into. Obviously, it has some work to do that, but if it finds acceptance there, I would expect to move back to the all-time high. Basically the same situation that we're seeing on the Qs. But let's go to the rest of the sectors. Here's healthcare, the second heaviest weighted sector. Right now, it is stuck in between the 20 and the 50 SMAs. Okay, so it's had this pullback. It's consolidating here, and it's going to have to pick a direction. It might consolidate for a little bit before it does, but it either breaks back above the 20 and heads to the all-time high, or it breaks down below the 50 and wants to pull back further. So it is the second heaviest weighted sector, so it will have some type of impact on the market. If you have tech strong and healthcare really weak, that's going to create this push-pull effect on the market. Okay, so something to be aware of. Otherwise, if healthcare just consolidates and tech rips higher, the market should have no problem moving higher. You're just not going to see these really strong breadth numbers, which is kind of what I was alluding to here in the internals. I mean, I was looking at the NYSE on Friday when the market was ripping. It's only 1.25 to 1. The NASDAQ is only 1.67 to 1 in the close. So those are not really strong numbers. You know, strong numbers is like 3 to 1 or greater. So when you see 1 to 1, it's, you know, obviously there's not as many sectors participating in the rally that we're actually seeing on the index itself. That's why it's important to look at your sectors and just get a feel for the entire market, and that's what the internals kind of help you do in real time when you're watching the market trading. So moving on to consumer discretionary, this is your third heaviest weighted sector, and it's interesting the 20 SMA has moved below the 50, and it is in a short-term downtrend. So as of right now, the trend could continue lower, and of course that would create kind of another push-pull effect on the market. And it might want to trade lower down here to these lows here. Otherwise, if we start moving back above the 50, it could move back to the all-time high. But this is another sector like healthcare that is sitting here underneath these moving averages, and it's going to have to make a decision one way or the other, while tech is looking to break out higher. And this is normal. This is where you have people rotating through sectors, right? So when tech kind of gets overbought and people stop buying that, they'll start buying these sectors. So right now they're buying tech, and right now they're not buying these sectors, and that will change. So that's what your consumer discretionary looks like. Moving on to communications. Again, your fourth heaviest weighted sector. This was one of the strong ones this past Friday, along with tech. Ripped up here, and it's right at the all-time high. So it looks a lot better in terms of being able to break out higher. And this has your companies like Google and whatnot in it that obviously have a lot of weight being as big as they are. Moving on to financials. This still looks bullish, trading very well above the 20. And really just small days, nothing crazy. Definitely looks good to continue the trend higher. Industrials, bullish, trading above the 20. There is some data coming out this next week that, or not data, I should say. Of course, the Congress is working on a infrastructure plan, and if they do pass something, that will definitely be bullish for stocks in your industrial sectors and things like that. But like I said, continues to remain bullish, trading above the 20. Looking at your consumer staples, typically your defensive sector, it is sitting at a double top right here, but it is bullish and trading above the 20. Utilities, again, typically one of your defensive sectors. To me, it's looking like it's flagging right here, and it might want to break out higher. Keep in mind that utilities is one of, if not the only sector that hasn't gotten back to its all-time high after the COVID sell-off. You look at the long-term chart here, and you can see it does look like it's flagging right here off this prior resistance. And if it breaks out, I'd be targeting that all-time high. So there actually might be a decent trade there. I might look at doing an option spread or something on that. I'm not sure how liquid this ETF is to trade, but something that I might look into. It definitely looks like it's flagging and wants to break out higher, and obviously the trigger is the break of that trend. Real estate, really extended but very bullish, all-time highs, flagging up here, might even continue higher, or it might just consolidate sideways. It's obviously getting a bit extended from the 20 SMA, so I would not be surprised to see a little bit of consolidation here, but obviously very bullish. Just a couple more. You've got basic materials. Looks like it's a classic pennant pattern here, bullish, trading above the 20. I would expect to break above that for a trigger for another move higher. And energy has been strong all year, but again, we go to that macro picture, you can see from the monthly chart, it's still down quite a bit. It's still working its way back up here to this downtrend line, which, you know, is probably going to bring prices up to that $60 area. You've also got moving averages sitting right overhead there. Okay, so let's go ahead and run through our favorite stocks to trade. The first one I want to go over is Apple, and I actually posted a possible trade idea on this in the chat room. But what I was talking about is I'm kind of looking at here as a potential head and shoulders pattern where you have your left shoulder, your head, your right shoulder, and this is typically a bearish pattern. Now keep in mind, chart patterns they're just one factor that you're looking at. You're not taking a trade just off of a chart pattern, but this is potential for a long-term short idea if the market shows weakness at any point in the future. Apple's a very bullish, very heavy weighted stock in the index. If it's weak, the rest of the index is going to have trouble to stay strong. So what I'm looking at here on Apple in the short term is actually a possible move higher. You can see on Friday we traded up into the 20 SMA. Getting inside this pocket here, I'd probably definitely be looking for a move back to the 50 SMA, and then at that point it might want to magnet to this downtrend line here. So this downtrend line is anchored on days of significantly higher volume. So this will definitely have some type of reaction. This will definitely be an inflection point if you see price move up into that downtrend line. That's what I'd be looking for in the short term, at least a move to the 50 SMA, if not a move to this downtrend line. Otherwise, the neckline of the head and shoulders pattern is obvious, and it's right here. So if price confirms below that, ideally comes up and back tested as support, that could be a longer term short idea for Apple. So something to watch for. But in the short term, this next week, I think possibly a move back up here to the 50 SMA. Okay, so Amazon. This is one that I actually have been trading back and forth with butterflies. I still have some broken wing butterflies open on this. I still remain bearish on this. Look at the small day that it put in this past Friday when the market was ripping higher. So Amazon to me is looking weak. It just does not seem to be finding buyers, and I would say that any move lower below last week's low on Thursday here would definitely open the door to fall down inside of this pocket to at least 31.50, maybe even the 31.20 area where you have prior support. And then more in a macro sense, huge pocket down below us if Amazon wants to really show weakness and start falling apart. Been playing butterflies off of these levels here as well, so that would pay out very nicely if Amazon ever does make a move lower. I'm looking at last week's low. We're going to need weakness in the market, but if that happens, Amazon's a top short idea for me going forward. Let's go to Facebook, and for Facebook, it is trading right at its all-time high. Obviously, the market looking like it wants to break out higher. Facebook is one that I'd look at for a potential break over that all-time high if that happens this next week. So the next one I want to just go over quick is Netflix. This isn't so much for day trading. I really don't see much to do with the stock in terms of day trading. But we have been playing ratio spreads off of the 475 and 460 levels. So we're long one contract at the 475 and short two at the 460, which constitutes your ratio spread. And we're obviously looking for Netflix to see a move lower. It still looks really weak. It just looks like crap here in the chart. So if Netflix can actually see a pull down low at any point that we have those spreads open, they're going to really expand nicely. And that's what we're kind of looking for is, kind of at least a move down through 480, 475, maybe 470, where that spread would expand nicely. So otherwise, I don't see much to day trade there, but I'm just going to keep throwing on these spreads on Netflix and playing off those levels until we get the move down there. NIO actually looks pretty decent for next week. So this is a stock that it's your Chinese EV cars, and it tends to trade fairly closely to Tesla, but it's looking a lot better than Tesla right now for the bulls. It is trading up right here to this prior swing high at 43.22. I think that's going to be an inflection point for a breakout higher, where I'd probably be targeting 46.29. That's going to be your prior swing high from back here. So I definitely like a breakout over 43.22 for NIO, targeting around 46 area. And then we got a decent sized pocket above that where we could be coming up into all of this the bottom side of all this prior supply. And you also have this downtrend line here. That's a long ways away, but in the bigger picture, if the bulls really show up on NIO, it might want to make a run back up here into this area. But first, I would be targeting that pocket right there. Just a quick look at NVIDIA. I don't really see a whole lot to do with the stock right now. It's obviously very extended, so I wouldn't be taking any longs on this, but I also wouldn't really be shorting it because it's so bullish right now. I just don't think it's going to have some big hard pullback into this prior breakout high. Should it pull back into that 648.57, that would definitely be a solid long idea. But I think what's more likely to happen is it might actually continue to push up higher, but I just don't feel comfortable buying it up here, or it might just kind of consolidate, and that's not going to really be the best short. So I just don't see a lot to do with it, but let's just keep it on watch because obviously it is very extended, and we might be able to trade it one way or another if it ever does pull back. Okay, so let's go on to the last couple here I'm going to look at is Tesla. So this one is another one that we have a trade open on right now. We have a ratio spread down here at the 540 and the 500. It's got this trend line here that it's still trying desperately to hold. It's struggling with it. You can see where it tries to hold it, failed breakout below it, and then reclaimed. And then here this past Thursday, some news came out and it tanked really hard below the trend line, but then on Friday it promptly reclaimed it. So I'm leaning more bearish on this stock right now. We do have the overhead supply in terms of the 200 SMA and the 20 SMA. I think that maybe we see a rollover from here. Any break below last week's low right here that came in on Thursday is going to open the door down to at least 540, I think. That would be a significant move and a great move for our spreads to really expand nicely. And then otherwise, the level below that I'd be looking for that we've talked about many times is that prior breakout high at 50214, maybe even that 500 whole number. I think a lot of eyeballs are looking at that right now. So we'll see if Tesla wants to make the move. That'd be great for our spread. That's what I'd really be looking for any potential day trade as well. Any break below last week's low on Thursday should easily open the door down to the 540s. The last one we're going to look at here is Twitter. Now, this is not one that I really like to trade very much, but there is an unfilled gap to work with here, but it's not the cleanest because you do have the 50 SMA kind of sitting right here in the middle of the gap. So that's going to be a little bit of overhead supply for the stock, but if it can clear that, it may want to go for the gap fill, and then you also have a downtrend line right here. So it's not a day trade that I'll really be looking at taking, but I might look at putting on some type of a spread, targeting the top of the gap fill up here, some type of a butterfly spread, depending on the pricing. It's a cheaper stock, so those are a little bit harder to pull off than a stock like Amazon or Netflix, but I'll certainly look at that next week and see if there might be a trade that we could set up there. So guys, I'm going to wrap it up there. I hope you guys found the video helpful and enjoyable, and I wish you guys a great and green week of trading. Take care, and we'll see you in the next one.